Chuck Carvell. I'm the Chuck in the Markets Up Chuck. And today I want to talk about the importance of valuation. I'm going to use EMC, a very well-known data technology company, data storage technology company. And I want you to look, first of all, from a perspective of the last 20 years. I want you to notice that there was a period here beginning in, the early part of this period where earnings were very strong and the company's stock price followed that. And then here's where I want to bring in the importance of valuation. Then we hit this irrational, exuberant period, especially in technology stocks, where you can see EMC stock price went inexplicably straight up, far above anything that even resembled valuation or in any relationship to its earnings growth. And then, of course, what happened was the bubble burst, as we all know, and, of course, their earnings also fell. And then look how the stock price came tumbling down. It fell from a high of 82, all the way down to just under $6 a share, which obviously was in line with earnings. But clearly, during any of this period of time, even here when you were still making money in the stock, a sound investor, a smart investor, had to know that they were simply gambling at this point because there was no real value, in the company's shares at that point in time. Now, if I just focus on the last 8 years of EMC's existence here, really starting actually from 2003, you can see earnings growth here has been very exceptional during this period of time. They've compounded. Their earnings went from 25 cents to 38 cents to 52 cents, a little flattening here at 55 cents, 75, a little flattening again to $1.05, but the average was 22.8%. Now, what I want you to notice is when the stock price was above earnings, the rate of change of earnings growth, which is this green line with the white triangles, it, like in this case when it was overvalued, it went flat for a couple of years. Then it got undervalued, which would have been a good time to buy it. Then it got irrationally exuberant again, not to the extent it was back in '99, but it got overvalued. Then the stock price fell and got undervalued. It came back into earnings. Then we had the recession, of course, and it got significantly undervalued, only to come back to its earnings justified level. The importance of valuation is significantly important, and people tend to forget about it. The reality of it is, in the long run, earnings determine market price, and you can determine value by looking at what relationship the company's stock price trades in relation to its earnings. It's Chuck Carvell saying thanks for listening. It's Friday. We won't be posting a blog over the weekend as usual, but you all have a great weekend. I'll talk to you again soon. Thanks.